Hello everyone, we're going to continue our report, which is the chapter 6 entitled Worksheet, Financial Statements, and Completion of the Accounting Cycle. Statement of Cash Flows. A statement of cash flows provides information about the cash receipts and cash payments of an entity during a period. Formal statement that classify cash receipts or inflows and cash payment or the outflows. The statement shows the net increases or decreases in cash during the period and the cash balance at the end of the period. It also helps project the future net cash flows of entity. So, sa cash flow statement naman, dito binubuo yung kabuoang halaga ng pera o cash equivalents na pumapasok at lumalabas sa isang company. Ang main components naman ng cash flow statement are the cash from operating activities, cash from investing activities, and cash from financing activities. Cash flows from operating activities. Cash flow from operating activities are generally the cash effects of transactions and other events that enter into the determination of profit or loss. These cash flows can be presented using either the direct or indirect method. So we have the direct method. The entity's net cash provided by or used in or operating activities is obtained by adding the individual operating cash inflows and then subtracting the individual operating cash flows. And the last one is indirect method. Derives the net cash provided by or used in operating activities by adjusting profit for income and expenses items that resulting from cash transactions. Cash inflows, receipts from sale of goods and performance of services, receipts from royalties, fees, commissions, and other revenues. The cash outflows, payments to suppliers of goods and services, payments to employees, payments for taxes, payments for interest expense, payments for other operating expenses. The cash flows investing activities. Investing activities includes making and collecting loans, acquiring and disposing of investments in debt or equity securities, and obtaining and selling of property and equipment and other productive assets. The cash flow from investing activities is a section of the cash flow statement that shows the cash generated or spent relating to investment activities, including purchases of physical assets, investments in securities, or the sale of securities or assets. Cash inflows, receipts from sale of property and equipment, receipts from sale of investment in debt or equity securities, receipts from sales collections on notes receivable. The cash outflows are payments to acquire property and equipment, payments to acquire debt or equity and equity securities, payment to make loans to other generally in the form of notes receivable. Cash flows from financing activities. It is include obtaining resources from owners and creditors. So, ang cash inflow ay ang pera na pumapasok sa isang negosyo. Maaaring iyon ay mula sa mga benta, pamumuhunan o financing. Ang kabaliktaran naman ng cash inflow ay ang cash outflow, na kung saan ay ang pera na iniiwan ang negosyo. Ang isang negosyo ay tinuturing na umaangat kung ang cash inflow na ito ay mas malaki kaysa sa cash outflow. So here is the Example of a statement of cash flows. The Coral Beach Resort for the month ended October 31, 2016. So, cash flows from operating activities. We have cash received from clients, payments to employees. Cash received from clients is 130,500. Payments for employees is 12,000. Payments for office rent is 63,000. Payments for insurance is 72,000. Payments for advertising is 5,250. Payment for other operating expenses is 4,500, which is nakakuha tayo ng total na 26,250. Pinag-add lang natin yung 12,000 to 4,500. Then isusubtract natin siya sa 130,500. So, magkakaroon tayo ng 26,250, which is, ang isang company ay maaring nalugi or nagkaroon ng utang sa ibang company. So, we have here the cash flows from investing activities. We have payments to acquire vehicle, 600,000. Payments to acquire equipment, 162,000. Ang net cash provided by investing activities naman is 762,000. So, pinag-add lang natin yung 600,000 plus 162,000. Kaya nagkaroon tayo ng 762,000. Cash flows from financing activities. We have cash received as investing by owner, 1,350,000. Payments for withdrawals by owner. So, dito naman ilalas natin yung 15,000 sa 1,350,000. Kaya magkakaroon tayo ng total na 546,750. So, yun na rin yung magiging total niya sa cash balance at the end of the period. The relationship among the financing statement. So, sa paggawa ng worksheet or balance sheet, dapat mayroong date at beginning of period, time, date at end of period, para malaman kung kailan nagsimula at kung kailan yung huling post ng isang entries. Income of a statement or the statement of cash flows. The income statement report all income and expenses during the period. The profit or loss is the final figure in this statement. So, dito makikita kung nag-gain ba yung isang company or nagkaroon siya ng net loss. The statement of changes in equity considers the profit or loss figures from the income statement as one of the determining factors that explain the change in owner's equity. The balance sheet reports the ending equity taken directly from the statement of changes in equity. The statement of cash flows report the net increase or decrease in cash during the period and ends with the cash balance sheet. So, ito yung example ng adjustment na kailangan naka-journalize and naka-posted. The adjustment process is a key element of accrual basis accounting. The worksheet helps in the identification of the account that need an adjustment. The adjustments are journalized and posted as the closing entries are made. So, why adjustments are journalized and posted? Because adjusting entries allow the accountant to communicate a more accurate picture of the company's finances. The owner can read through the financial statements, knowing that everything that occurred during the month is reported, even if the financial part of the transaction will occur later. Closing in entries are journalized and posted. Income, expenses, and withdrawal account are temporary accounts that accumulate information related to a specific accounting period. These temporary accounts facilitate income statement preparation. At the end of each year, the balance of these temporary accounts are transferred to the capital account. This phase of the cycle called closing procedure. So to summarize, the closing entries are journalized and posted once per year at year and after financial statement have been prepared. In trial balance, the closing process begins with the adjusted trial balance. After the closing entries, we have been journalized and posted to the ledger and a post-closing trial balance is prepared. The entry number 1, which is closing the revenue account. Since all the revenue accounts have a normal balance, we need to debit a revenue account appearing in the income statement credit column of the financial statement worksheets to bring their balance to zero. So sa sales, meron tayong 6,000. Sa interest income is 360. Sa other income naman is 400, which is the income summary is 6,760. Kaya nakuha yung total, pinag-add natin yung sales plus interest income plus other income equals 6,760.
Entry number 2. Closing the expense account. It will reduce all expense account to a zero balance by transferring them to the income summary account. Since the expense account is all have debit balances, they will have to be credited to obtain a zero balance. On the August 31, the income summary is 5,960. Salaries and wages, 2,140. Insurance expense, 140. Cost of food sold, 1,780. Interest expense, 500. Depreciation expense, 440. Other operating expense, 960. Close the expense accounts, the income summary account for El Silito Restaurant appears below. Closing 1 is 6,760 and the closing 2, 5,960. Natin nakuha yung 5,960. Ganito. Yung 2,140 to 960, i-add lamang natin to para makuha yung 5,960. Closing 2 is 5,960. Entry number 3. Closing the income summary account. After the first closing entries are recorded and posted to the general ledger, all the revenue and expense account have zero balance and the income summary account has a balance equal to the net income or loss for the accounting period. The third closing entry will transfer the balance of the income summary account to the appropriate owner's equity account. Income summary on August 31 is 800. Din ang capital ng Silito Restaurant. Use the income summary account in T account from the income summary and the capital account of El Silito Restaurant will reflect the following. In the account form, closing 1 is 6,760 and closing 2 is 5,960. Closing 3 is 800. With 6,760 yung closing 2 to closing 3 kasi pinag-add natin yung 5,960 and 800 kaya equals niya is 6,760. Dito capital. On August 31, closing 3 is equals to 800. The 10,040 pesos is the beginning balance. Entry number 4. Closing the owner's withdrawal. Closing entry complete the closing process by transferring the owner's withdrawal account balance to the capital account. The withdrawal account is considered a nominal account. 31. Silito capital is 1,000. Also, silly to withdrawals is 1,000. To close the withdrawals, the effect of the above entry, capital and withdrawals account are shown below. Silly to capital, closing 4 is 1,000. The beginning balance on August 31 is 10,040 pesos. And 800 is the closing 3. 1,040 pesos plus 800 is equals to 10,840. 1,840 minus LCD to withdrawals equals to 9,840. Salaries and wages balance 2,140, closing to 2,140. Interest expense balance 500, closing to 500. Other operating expense balance 960, closing to 960. Insurance expense balance 140, closing to 140. Cost of food sold balance 1,780, closing to 1,780. Depreciation expense 440, closing to 440. Income summary closing 6,760, closing to 5,960, closing 800. LCD to capital beginning balance 10,040 pesos, closing 800, closing for 1,000. LCD to withdrawals closing for 1,000, balance 1,000. Closing 6,000, balance 6,000. Other income closing 400, balance 400. Interest income closing 360, balance 360. Preparation of a post-closing trial balance, step 9. Possible to commit an error in posting adjustments and closing entries to the ledger accounts. Thus, it is necessary to test the quality of the accounts when preparing a new trial balance. This final trial balance is called post-closing trial balance. The post-closing trial balance verifies that all the debits equal to the credits the trial balance. The trial balance contains only balance sheet items such as assets, liabilities, and ending capital. All income and expense accounts as well as the withdrawals account have a zero balances. Facility Restaurant post-closing trial balance on August 31, 2016. Cash, 2,000 pesos, which is debit. Account receivable, 4,000 pesos. Notes receivable, 6,000 pesos. Accrued interest receivable, 360. Food inventory, 420. Prepaid insurance, 100. Furniture and equipment 4,400. Accumulated depreciation 2,200. Accrued interest 100. Accrued salaries 140. Notes payable 2,000. Accounts payable 3,000. Silito capital 9,840. Equal of the debit is 17,280. So the equal of credit is 17,280, which is balance. Reversing entries. Step 10. Preparing the post-closing trial balance may not be the last step in the accounting cycle. Some entries elect to reverse certain end-of-period adjustments on the first day of the new period. A reversing entry is a journal entry which is the exact opposite of related adjusting entry made at the end of the period. Emphasize that reversing entries are optional. Also, act of reversing a previously recorded adjusting entry should not lead us to the conclusion that the entries reversed are unnecessary or inaccurate. Even when an entity follows the policy of making reversing entries, not all adjusting entries should be reversed. Generally, a reversing entry should be made for any adjusting entry that increase an asset or liability account. For example, in the case of a prepaid expense initially recorded in an expense account, the adjusting entry debited an asset prepaid expense. An asset increase, hence, applying the general rule, this adjustment can be reversed. After analyzing the rest of the adjusting entries, the adjustments that can be reversed are as follows. Prepaid expenses method. unearned revenue, income method, accrued expenses, and accrued revenues. To illustrate, we refer to a 2-year note payable of 200,000 issued on July 1, 2016, bearing annual interest at the rate of 12% on the books of Ifugao Hotel. Interest is payable annually on June 30 on December 31, 2016. The following adjusting entry was recorded to accrue interest from July 1 to December 31, 2016. 200,000 times 12% divided by 2 is equals to 12,000. December 31, 2016, interest expense, accrued interest payable 12,000, to record 6 months interest 12,000. On June 1, 2017, the first day of the new accounting period, we record the following entry in the General Journal. January 1, 2017, accrued interest payable 12,000, interest expense 12,000.
On June 30, 2017, the interest payment is recorded in a routine manner as follows. 2017, June 30, interest expense 24,000, cash 24,000, to record payment of 12% interest. Then the accrued interest for the 6 months from June 30 to December 31, 2017, the following entry must be made. After making the following entry, the interest expense for 2017 will be correctly recorded as being 24,000 pesos for a full year. 2017, December 31, interest expense 12,000, accrued interest payable 12,000, to accrued 6 months interest from June 30 to December 30, 2017. After posting the above entries to the general ledger, the interest expense account would reflect the actual expense for the period commencing January 1, 2017 and ending June 30, 2017 as follows. Interest expense in 2016, December 31, 12,000. 2017, June 30 payment, 24,000. December 31 accrual, 12,000. The total is 36,000. The December 31 balance is 24,000. 2016, December 31, closing entry 12,000. 2017, January 1 reversing 12,000. The total is 12,000. Procedures applicable to a corporation. The accounting process for a corporation is basically the same as the sole proprietorship or partnership, which has been the subject of our in-depth review in the last few chapters. Corporations will have one additional accrual adjustments, namely the accrual of income taxes. This will result from the fact that corporations are subject to taxation of their income. The accrual will entail a debit to income taxes expense and a credit to income taxes payable. The closing process of corporations is very much the same as has been illustrated in this chapter for El Cielito Restaurant, a sole proprietorship, but the retained earnings account is used to transfer net income to owner's equity in the case of corporation. Consider the following closing entries of Banawi Hotels on October 31, 2017, the end of its fiscal year, to illustrate the closing procedures applicable to corporations. Entry number 1, 2017, October 31, room sales 1,600,000, food sales 700,000, beverage sales 360,000, other income 100,000. Income summary is 2,760,000. So, paano nakuha yung 2,760,000? Pinag-plus lang lahat yung room sales to
other income, kaya nakuha yung 2,760,000. To close revenue accounts. Entry number 2, 2017, October 31, income summary is 2,420,000. Salaries and wages, 1,100,000. Cost of sales, 500,000. Supplies expense, 300,000. Depreciation expense, 260,000. Other expense, 158,000. Income tax expense is 102,000. Ganun din dito sa entry number 2, pinag-plus lang lahat ng salaries and wages to income tax expense, kaya nakuha yung 2,420,000. To close expense accounts. Entry number 3, 2017, October 31, income summary, 340,000. Retained earnings, 340,000. To close the income summary accounts. Entry number 4, 2017, October 31, retained earnings 80,000, dividends 80,000, to close the dividends accounts. The effect of the above entries on the general ledger accounts is presented below. So this is the accounts of overall entries. Income summary, closing 1, 2,760,000, closing 2, 2,420,000, closing 3, 340,000. So yung 2,760,000, pinag-plus lang yung closing 2 tsaka closing 3. Then yung closing 1, 2,760,000. Retained earnings, closing 4, 80,000, balance 60,000, closing 3, 340,000. So pinag-plus lang ulit dito yung balance tsaka yung closing 3. Kaya 400,000, pero yung balance is 320,000. Dividends, balance 80,000, closing for 80,000. It is apparent that the closing of revenue and expense accounts is exactly the same for corporations, partnerships, and proprietorships. Closing entries number 1 and number 2, the transfer of net income to owner's equity, is essentially the same for corporations. Closing entry number 3. Except for use of the retained earnings account as far as closing number 4 is concerned. Some corporations will omit this entry altogether by recording the dividends as a direct reduction of retained earnings.